So I'm Bill Cunningham, Washington, D.C. native, born at Freedman's Hospital. My father was an architect at Howard University. I went to Howard University, right? Went to Anacostia High School, Petworth Elementary School. So basically, I'm from here. Okay. Went to University of Chicago to study economics and finance. I worked for a guy named Andrew Brimmer, who was the first black on the Federal Reserve Board. Who, by the way, the key financial institution in the country is the Federal Reserve Board. So you should go over there. They're located here at 20th and C, right? Walk on down there, go in there and take a look at their life. And I'm actually not making that up. In terms of financing, you need to know they control everything through the allocation of capital, through interest rates, through what's called monetary policy. So I'm going to get back to that and use that as a way to explain how you can utilize your position in DC to get financing in a way that others cannot. So what I did was I gave out a handout. You guys got the handout. Oh, by the way, this is Dr. Olu. Dr. Olu is working with me today, and today only. One day only, right? He's a PhD in materials science, has invented and patented a new... What is your patent? Real quick.
It's a friendly jack for women. It's a friendly car jack for women. They could change a tire very easily. Okay.
Front end jack for women, change a tire using leverage easily, right? Mm-hmm. So, and this is the kind of talent that we have in our community that I run into all of the time. Should this guy be able to get funding? Yes. Yeah, absolutely. He can, but he should be able to, and we'll talk about that. Now, I gave you a handout. This has the 2 books that I've written on something called crowdfunding. Crowdfunding is open source financing. How many people have heard of Indiegogo, Kickstarter? We'll get into that a little later, okay? But basically, this goes over that. On the front side are some hints with respect to crowdfunding. The bottom paragraph outlines where crowdfunding is today, kind of what's going on right now in crowdfunding, how you can utilize that to get capital. So we'll come back to that. Thank you, Angel. And Angel and I go way, way back. So we did this thing real quickly. We did a meeting up at WeWork Wonder Bread, Martin Luther King's birthday, called South by Southeast. How many people have heard of South by Southwest? Okay. Because what we were looking to do was to focus tech on underserved communities, specifically Anacostia, look at the talent. People like Dr. Olu, who we know are out there trying to get them funded. So it's good to be back with you. You're going to behave this time? Never mind. Thank you.
He knows he's doing that. Okay. Alrighty, great. So I'm actually really excited about this. Financing is always a tough subject for people, especially when you're first getting started, and especially when you're a minority in DC. So I'm curious, what are some of the advantages and disadvantages to being an entrepreneur in DC trying to get financing?
Since I touched on the Fed, I'll talk about it. All right, so how many people taking notes? If you're taking notes, I want you to write this down. OMWI, Offices of Minority and Women Inclusion. There are 29 of them. This was out of Dodd-Frank. In my PowerPoint presentation, which somehow I wasn't able to get going, I have the list of the 29 offices along with the names and the phone numbers of the people who run those offices. Dodd-Frank, Section 342, created these offices. They are responsible for looking at diversity performance of the agency, diversity performance of the contractors. Actually don't need a mic because I'm pretty loud. Of the contractors who do business with those agencies, and diversity performance of the regulated entities. Regulated entities. Diversity performance of every bank in the country. Diversity performance of every security broker in the country. You should utilize this to leverage financing, okay? But you have to know about it in order to leverage it. That's key, because you're here, and all the major OMWI offices are here. So it's Treasury, Securities and Exchange Commission, Federal Housing Finance, all of the major financial regulatory agencies. So what you want to do is you want to get the list, the names of the people who run those OMWI offices, and you want to go see them. You're here, they're here, you know. They're going to give you the runaround, they're going to try to dodge you, you know, that sort of thing. That's fine. That's fine, because you're here, but go and find out about what their offices are doing to evaluate diversity practices at every bank, securities firm, investment bank, private equity fund in the country, in terms of whether or not you get funding from all the studies show this, from an angel or from a venture capital, is whether or not you are networked, whether or not you are introduced by another company that's been funded by a VC, right, or by another angel. When I was working with a group that was trying to buy black banks, and we got funded to the tune of about $2 million, actually it was $5 million, from a brother in Chicago. And now we had worked on this for about 2 years. And it turns out that somebody I went to University of Chicago with said, oh, you're doing that? Let me call up this guy. This guy came in, he met me at the Cozy Coffee on Capitol Hill. He was like, yeah, I'm in town. The next thing I knew, he said, yeah, well, all right, I get it, you know. So-and-so told me who you were, y'all went to school. That's fine. I'm liquid. Send me, and I need to see your document. Yeah, I'm going to send it by lawyer, all of that, you know. But that's all a formality. I get it. Send me an invoice, and I'll send you $500,000. That's how that worked. 2 years of struggling, 5 minutes at a coffee shop with a guy, because I was networked in with some, and this is the way it works for, and this is where the racism comes into play, because this is the way it works for a lot of other people all of the time, you know? So being networked in. Another great angel forum group is something called Keiretsu Forum. Keiretsu Forum is an angel grouping out of California. They're based in Bethesda. Here's the issue though. You're not going to get funded by Keiretsu Forum. They haven't funded any black people at all. They funded one black person, I think. So just keep that in mind. It's interesting to know that they exist, though. And to remember, I just said about being networked in. You can use that to get networked into the angel community. But just know that they're probably not going to fund you, you know, there. So, and then we'll come back and talk about the other way that I think for black people is particularly relevant, which is crowdfunding. But I don't know when you want to get to that point of discussion. Oh, there was a study that was done that showed that if you're looking at let's do a deep dive on the network. Where in your network is the value? It's at your third level connections. The first level people, they know you too well. All right, they're not gonna, you know, they're not gonna write a check. They just know you too well. You know, the second level people, they know the first level people who know you, and yeah, you know, they may or may not. If it's in their area, right, healthcare or something like that, you know, sure, they'll take a look. It's the third level people, which is where you get the traction. So what that means is that you have to roll through you have to use your first level to get to the second level, to get to the third level. And the reason the third level works is because by that time, the third level only works with somebody who's in that box, right? I'm in that box. I own a bank in California, okay? So you come to me talking about buying banks, I'm in, you know? Now the guy over here who owns a bunch of restaurants, no, he's not, you know, but you go to the banking guy, and if you're deep enough with expertise in that banking area, so you come in and talk the lingo, okay, hey, Andrew Brimmer, first black Federal Reserve stuff, yeah, okay, I get it. This guy is in my box, and he's doing interest. Here you go. I got $500,000 for you. Okay,
so
to do this.
What are some top 2 or 3 things that you really want to make sure you have down before you go talk to an investor or a VC?
Well, and just piggybacking on what I just said, don't go talk to a VC unless you're networked there.
Yes, that's what I mean. Once you get that meeting, you get that meeting with the customer or the VC, what do you really need to have?
I don't like VCs. 99% of money goes to white people. 1% of VC money goes to black people. They are not going to fund you. They just aren't. Angels, and remember, angels are different. Angels are, you want to open a restaurant, and there's a bunch of brothers who have restaurants, and they've got some excess cash. Sure, they'll write a check if you're networked in, if they know you and somebody can vouch for you, you know. But The big venture capital funds, you know, the ones Jesse Jackson has spent all the time, they're not going to fund you. They are racist. The way venture capital works, it's corporate welfare for little 20-something white guys. It is. Think about it. They lose 80% of the money. They lose 80% of the money. But they learn along the way, right? So, yeah, I lost $1 million that time, but then I'm going to come back and I'm going to use that learning when I get my next $1 million from the venture capital guys. That only works if you're white. It's not going to work for you, right? So you have to determine an alternative way of going forward. The alternative ways are as follows. Either crowdfunding, angel investing, or bootstrapping. Okay, or possibly bank financing if you have the assets already in place, if you've got the money. One of the things we're recommending that black people do specifically is if you're looking at franchises, look at areas like Anacostia, look to crowdfund real estate. That is the location of the franchise. Okay, so you get a building, Benning Road, or actually Martin Luther King and Good Hope Road. Okay, you spend $1 million for it. You create a company, that asset, that real estate becomes your asset. So the franchise is no longer just a franchise, but it's actually got an asset, which consists of that real estate property. The other thing to do is to find black people, black families in those communities, and see if you can partner with them to utilize their assets, which they're going to sell. You know, they're going to sell to some white people coming in. It's just, again, I'm from here, right? So Angel is looking at me askance, but that's pretty much what we see going on. But there's a way through that involves partnership, using those assets in support of business opportunities, franchises in particular.
Well, let me ask the question. So, for people,
She's taking over the panel.
so for people like that have those ideas, what would you say? Should they go forward with their idea and figure out financing on their own terms, maybe through a bank or something, if it's not appealing to an angel investor or a VC? Or should they skew more towards those ideas that angel investors and VCs would be interested in?
Well, again, there's nothing wrong with a UPS store or a McDonald's franchise or nothing. I mean, those are great businesses to have, you know. Yes, it's not Facebook, you know, because there are not that many Facebook stories and products that are out there. There's a whole story behind Facebook anyway, which we won't get into, that has to do with control of the, but anyway, so you got to go with what you have. Now, if you're looking at, I would say that putting together the business plan, and by the way, I have a 10-page slide deck that if you email me, you know, I'm happy to send out to you, that goes through all of these sorts of things. It really depends upon how much money you need, what your market is, what your product is, where you are at the stage of development. You know, credit card financing might work. If you can get $10,000 off of a credit card and your product requires $9,000, then you're good. You know. On the other hand, if your project and product and company requires $1 million, then a credit card just isn't going to do it. So you have to think about a different financing tool or technique. And that's when you get into angels or VCs, again, which I absolutely hate and I don't recommend you going to, or banks. I'm not that much friendlier toward banks, by the way, given kind of what their reputation is and their track record is in the community. But to go through that 10-page, 10-slide strategic planning exercise, and that will give you a good baseline from which to determine what your capital requirements are. Once you know what your capital requirements are, then the flow of capital will be obvious. You know, here's the other thing. You might have to take an all of the above strategy, right? Do the credit, and I've seen people do this successfully, where they did $500 loan from their brother, they did $10,000 in credit cards, they did $5,000 in an SBA loan, they did $20,000 in a VA loan. So I've seen that work too, you know. But it is trial. Now the last thing I would say, on the handout that you got, the current trends. One of the things is Venture capitalists, I think we just over-focus on VCs, but they are requiring companies to do crowdfunding before backing them. The idea being that if you've got a jack that can be operated by women, put it up on Kickstarter, and let's see how many orders you get for that. If you get 1 million orders, of course I'm in. I got 10 million for you backing that, you know. But if you get 20 orders, you know, is the product not right? Are you not right? You know, what's going on? Because it should work. Last thing I will say, just piggybacking on some of the points that have been made about why you don't get funding from VC. The number one reason you don't get funding from VCs is because of your leadership style. The second is because of your team. You're too polite. You've got the wrong team. You know, something's going wrong, you know, with respect to your team. The third reason is because you have not proven that there is a market for the product or service that you're putting out there. It sounds great to you. It may sound great to the VC, but you know, that doesn't matter at the end of the day. My problem with VCs is this: greed. Most of the great products, and I mean the great products, have been developed kind of serendipitously, okay? They develop, you come up with a great idea, you work it, and things change. And then it becomes a great product. Facebook. Facebook was exactly that way. Google. Remember Google. Google started out, they wanted to have the best search engine. They were going to charge people $1 per search. That was the dumbest idea ever, right? And it didn't work. What happened was they had an intern from Stanford in their second year who said, hey, rather than trying to charge people for search, I got this idea about advertising. They said, no, we don't want to have ads on our front page. Because remember where search was back in the day, if you looked at Yahoo, they had all these ads on the search page. They said, no, we want a clean page. So what this intern said was, no. We won't have the ads on the front page. That'll be clean. When you click the search button and the results pop up, then there'll be a little box on the side with, brilliant, 200, what are they worth? $200 billion or something like that. Serendipitously. The venture capitalists were going to fund them based on them charging people $1 or a penny. I forget what it was. What was it? 5 cents per search or something crazy like that, right? That's what they got funded for. But because they got the funding and because they had the time, they figured out that that was the dumbest thing ever and that they had to have advertising, and it worked like a charm. So this is my issue with venture capital, and especially with us. They give the other people all kinds of time to make mistakes and to fumble around in the dark, and then eventually they come up. Eventually they found it. Google found it. Facebook found it. You know, Microsoft found it. But you don't have that luxury, or people want to say that you don't have that luxury, you know? That means you have to find it. The last thing I left out of why you can't get funding is because you are uncoachable. You're uncoachable, right? This was in my PowerPoint, you know, but that's all right. You know, and what I mean by uncoachable, the guy mentioned it in the panel before about being an engineer and the ugly baby syndrome. You know, you're an entrepreneur, you're born at night in a log cabin that last night that you constructed, right? I mean, you're the best thing ever. So I can't tell you anything. I can't coach you. Now, the reason I hate Shark Tank, let's get back to why I hate Shark Tank, is because, yes, there is a role for coaching, but it has to be, in my opinion, positive coaching. Okay, really positive. You know, all this everybody and their brother. The other reason why I hate Shark Tank is everybody and their brother thinks they're a VC these days. I can't tell you how many times I go out talking to people like, well, what you should do is this. No, what you should do is shut the hell up, all right? Because I've got 2 degrees and I've been doing this for 30 years. So everybody has an idea. So, and my point is, it's a balancing act. Yes, there are people who know nothing about your business who are going to swear because they've watched Shark Tank that they can tell you how to make $1 million, and they can't. On the other hand, there are people who have great value-added expertise in your area who will be able to help you make $1 million. And you have to listen to those people. The balancing act comes in knowing who's in which category. And it's not easy. It's not easy to know who's in which category. But you have to be willing to be coached,
Coachable, yeah.
you know? And if you're trying to determine who's in which silo, the moronic, I watch Shark Tank category versus the I have real value to add to your expertise or to your venture, say that. Say, look, I'm having a hard time here, right? I'm going to let you know what I'm trying to do. I'm trying to decide if you're in the idiot category or if you're in the real value-added category. I wouldn't put it in quite those terms, but you know what I mean. I mean, it's all about communication and networking. It's saying to people, this is where I am. This is what I'm processing at this point. Oh, I get it. Okay, you're in the idiot category, so I'm not going to listen. Or, okay, I get it. You're in the real value-add category. So I want you to know that I am coachable. All right? I'm telling you, I'm coachable. What would you like to do? What would you like to tell me?